Hi, this is Charting Man Dan of thechartguys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hey everyone, hope you had a good Friday looking at SPY on the daily and weekly time frame. After a very bullish day yesterday on high volume with bulls buying the dip, we had a lower open today and then the bears controlled the majority of the day. We did have the bulls buy off of the lows. We can see these lower wicks. Bulls are buying these dips, but not seeing much movement to the upside, lower highs the past 3 days. Want to keep in mind that SPY today had an ex-dividend, so that was a little bit screwy this morning. Definitely better to be looking at the S&P 500 overall, but SPY is certainly a nice trading vehicle to utilize, which is why we cover it so often. So what we're looking at from here, clear 206 psychological support, and that is a level to keep holding. We've got the 50-day moving average of 206.83. We've gone back and forth over that level the past few days. So what does stand out is the lack of follow-through for the bulls. Bullish reversal doji, nice follow-through. Bulls could not hold any of those gains. We closed at the low. Bulls buy the dip big time. Very strong close yesterday. I was admittedly wrong. I thought there was absolutely going to be some continuation to the upside, but weakness and some consolidation today. So from here, heading into next week, we've got Brexit to consider. I personally don't think there's going to be one, so I think the markets are going to even out. We're going to see a bit of a sigh of relief, and I think the bulls are going to take back over because we got rate hikes pushed off. Brexit, I don't think is going to be a concern, and if that's the case, we should be back up towards the 210 level where we topped out up around 211.42. So that would be the resistance level we watch, and bulls need to keep holding 206. After these lower wicks have been bouncing off of that level, if we were to close below 206, that would be a setback for the bulls. Weekly time frame, we closed right below the 10-week moving average of 206.65, so it was a bearish reversal candlestick last week, confirmed this week, but the higher low is still being set with that lower wick. So 204.53 is a key level. We know 204 was a very key level of support back, and it's actually now that they've adjusted these prices, Stockcharts.com adjusts for these dividends, which is, I like that they do that because it does give some technically false signals otherwise, but that level that was at 204 is now at 203. So that 203 level is the must hold. And the bulls will be looking to hold 204.53, the low of this week, next week. And we'll see if we get some upside recovery. Again, want to highlight that these daily charts to me show the bulls buying these dips and getting ready for some upside potentially next week. So we'll check back in as always. I appreciate you watching. Have a wonderful weekend. Thanks for watching. The Chart Guys community has compiled trader tips from dozens of traders over the last year and put together a free ebook you can access by clicking the button and entering your email. Have a wonderful night.